There we go. All right, guys. Thank you so much for joining in. This attendance is much better than I expected. Our first one. So this is our first one. So bear with us. I think you're going to get a lot of value on this to be able to execute on buying a home, the biggest purchase in someone's life usually. So this is the Roots Realty Home Buying 101 webinar. This is our very first one ever. And we also have Brooke Peters from Union Home Mortgage chiming in here. So I'm going to go ahead and kick it off. So agenda for our webinar today, we're going to try to get you out of here within an hour. If the question and answers goes long, then of course you can choose to stay on and have your questions answered, or you can leave. But kicking it off with my brief story with my first home purchase, then why homeownership? What is the purpose? Where is the market actually at? You've probably heard the market is super tough. It's impossible to get a home, blah, 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 whatever you've heard of. We're gonna look at the facts and see if that's true. How to get mortgage ready. Brooke Peters from Union Home Mortgage is going to share about that. And then number 5, showings, offers, inspections, closing process. We're going to give you a high level overview. And then now what? What do I do now? And we just had someone else enter, so let me let them in. And where do I let them in? Actually, let me let them in. Oh, they're gone. Okay, we'll continue on. All right. Fact: homeownership right now is in the decline in the United States. 70% of Americans owned their home in 2004. This stat is now 66% of Americans own their home in 2022. So a 4% drop in the past about 20 years. I'm going to let someone in because, again, someone's entering. There we go. All right, continuing on. So homeownership is actually declining right now in the United States. This is the reality. There are many forces at play turning the United States into a nation of renters, right? Inflation, lack of building affordable homes, the Federal Reserve keeping interest rates high and then lowering them, and everyone offers and goes crazy when they lower the rates. Lease terms being unfair at times. Institutional investors buying up a ton of homes, stagnating wages, income not keeping up with home prices. The list goes on. But here's the truth. None of this matters unless you take action to stop this trend. There are a million reasons to not buy a home. I could give just as many reasons to not buy a home right now as I could to buy, but the fact of the matter is you have to take action to get educated, to feel confident to buy a home. So why am I here talking about this? Why am I in real estate in the first place? That's because homeownership actually did change my life. Back in 2018, I was working as a teacher, making $36,000 a year. And I bought a home. It was $118,000, and it was ugly yellow, and the weeds were as tall as my body. And I bought a home and did a lot of work over time, put a lot of hours into the property itself, and actually sold it in 2021. And I walked out of the title company with a $100,000 check. Of course, the market helped me a lot in that time. Let's be honest, the market throttled. But homeownership literally changed my life. I walked out of the door and I decided to go get my real estate license, and I bought 2 rental properties, and I guess the rest is history. So I can attest to the power of owning a home. So why homeownership? Why should you buy a home in the first place? Well, let's look at this chart. This is from the Federal Reserve, and this is the median sold price of homes in the last 100 years. It does not take a rocket scientist to ascertain where the value is probably going to go in the future, right? Now, a lot of people are like, oh my gosh, look at this. Well, that's because interest rates did double in the past 2 years. So we have had a slight downgrade, but it's actually going back on the rise once again, just like it did go down here. So 1980, the median price was about 80,000. In 2000, the median price was just over 200,000. And the median price of homes right now is 475,000 in the United States. So the wealth building capacity of owning a home is fairly obvious if you zoom out. Okay, so the United States Census did a study in 2021 of the composition of wealth by asset type. The number one was retirement accounts. The number two was equity in owning a home, 28.5%. Homeownership remains the number one feature of the American dream. 74% of Americans in this survey reported that they believe owning a home is the number one objective in the feat of the American dream, so to speak. Many people have probably heard this, but your net worth is your asset minus your liabilities. Assets appreciate over time and they gain you income, whereas liabilities decline in value over time and they cost you money. A car is actually a liability. A home is an asset. It increases in value. So Keeping Current Matters recently released this. A renter's average net worth, this is a true statistic in the United States, is 10,400. A homeowner's net worth in the United States is 300,096 $200. And according to our last chart, if you remember, 28% of people's net worth is tied up into their home. So it is fairly obvious that a lot of this is the value of their own home. Being that, I think someone just joined. Let me make sure. Oh,
I think
okay.
there's another participant that's presenting, so your screen just keeps getting removed.
That is a good call out. If you are presenting, make sure you are not. Let me make sure. Looks like I am presenting, maybe. Let's see. Is it better now?
No, you just stopped your screen. It was somebody else that turned it off.
Yeah, they're not presenting.
Okay.
Yours back
Can
on.
you see my screen?
Negative.
Good call. Okay, I will share my screen really quickly here. All right, can we see my screen?
See.
Good deal.
Can see it, yeah.
Thank you so much. All right, guys. So why homeownership? Summing all of this up, right? We see that homes increase in value over time. This is how it could relate to you. Well, every month, instead of paying rent, of course, you are paying down the principal on what you owe on the mortgage each month, adding to your net worth, essentially. You're reducing your largest line item expense, which is typically where you live, rent. And home appreciation, of course, is a nice cherry on top. What is not talked about that much is that the interest you pay on your mortgage payment is actually tax deductible, meaning you will get some tax savings from the mortgage payment. We know that that is not the case with rent. And inflation hedging. The reality is if homes increase in value, it hurts every renter because it makes it harder for them to buy it, whereas it helps every homeowner. It's a huge divide. Okay. How does owning a home play into your life? More consistent finances, of course. You have control over what you pay typically, more control over your actual living situation. You can make changes, right? You can make additions, more privacy, more options in the future, because you'll be building so much equity in the home that typically you can step onto the next home. And here's a beautiful home that is Pinterest worthy for sure. Okay, so we talked about why owning a home is so important, and that a renter's net worth versus homeowners, it's 40 times less typically. Most of you may have heard about that or known about that, but a big obstacle that is talked about a lot is the market. The market is this big hairy creature that people are so scared of. You know, your Aunt Susie is telling you, don't buy a home right now. They're so expensive. The interest rates are really high. Let's actually look at what the market looks like right now. This is March 2024. I don't have the data from April. It's not released in Indianapolis, right? So the average home sits on the market for 10 days. And the median home price is $293,000 in Indianapolis. So it is not half, but it is about 2/3 the median price of nationwide. The median home price in the US is 426,000 with the app, and then look at this. So it says 6.82 is the mortgage update. This has actually increased. I'm going to let Brooke Peters, Union Home Mortgage, talk on that if she wants to. But interest rates certainly are a factor driving what you pay for a home. Let's be honest; they change every single day. We can get into that as we continue. But the average interest rate in the past 50 years, from 1971 onwards, is 7.74%. Meaning we are actually under the average for the past 50 years in the interest rates. Now, relatively, they are much higher than a few years back, but in terms of the average over time, they're not terribly high. I'm going to admit this person in and continue. Okay, so this is what the market currently looks like right now. What about you? We're going to get a little more personal, and I'll talk about what about you and the process, and then we'll talk about mortgages here in a second too. How do you know if you're ready to buy a home? These are 3 questions I ask every person that sits down in front of me. Will I stay in this home at least 2 years? If you buy a home and sell it the year after, you will lose money. There's no doubt about it. Unless you're flipping it and investing a ton of money in it, you're going to lose money because it does cost money to sell a home. It costs about 8% of the purchase price to sell the home, with realtor fees and closing costs. So you need to probably make sure you're going to stay in the home for 2 years. If you stay in home for 2 years, you're probably going to gain money, get profit from that home. Also, tax reasons, there's capital gains, and if you stay in the home for 2 years, you will avoid those. Number 2, is my income and lifestyle consistent with homeownership at this point? Only if your income is going up one month and then crashing to the floor the next month, of course you probably shouldn't buy a home, let's be honest, and I doubt the mortgage company will actually qualify you. Luckily there are barriers in place to make sure that you qualify. And then is your lifestyle, right? Are you nomadic, moving around, or are you going to stay in the same city? Of course, buying a home is planting roots. And then the third one, which Brooke Peters will talk about more, is can I actually get qualified for a mortgage and pre-approved? 1/3, what does this mean? I have a rule of thumb that I believe my parents told me, and now a bunch of other people in the industry like to share about, which I completely agree with. In fact, 1/4 could be even better, but less than 1/3 or 1/3 of your monthly income should be ideally going to your mortgage payment, right? Now, mortgage companies will oftentimes pre-approve you up to 50%. They'll allow 50% debt to income. That's 1/2. To be safe, 1/3 is really ideal. So this is kind of just a good litmus test. If my monthly income is $5,000, that means my mortgage payment ideally stays under $1,667. Now, this isn't exact. If you want to get a better home, you may go a little over that. This is just a really good litmus test to keep in mind. I like to keep it as a rule of thumb. Final question to ask: if you're ready to buy a home? And I think this is the most important question by far. Am I committed to making this happen? It's a commitment. It's going to require education, financial savviness, saving money. So if you are committed, well, let's continue on, and we'll continue to show you some practical steps on how to make this homeownership dream a reality. I'm going to turn it over to Brooke Peters from Union Home Mortgage, who's going to share a little bit about what a mortgage pre-approval is.
Yeah, thank you. So typically when you start your home buying process, the first conversation you will have is with your realtor, right? Because you're like, hey, I'm ready to be in the market to buy my first house. And the first thing they're always going to say is, do you have a pre-approval? And as a first-time home buyer, you're probably like, what the heck is that? So that's going to be the first thing that you're going to want to do is get a pre-approval. This is going to tell you how much you can afford. And typically going through that process, it will break down your down payment and your closing costs, and then your monthly payment. I'm huge on that education purpose to show that that whole breakdown, so you have complete confidence when you go out to start looking at homes and when you start making offers on homes. Pre-approval makes you 100 times stand out as if you didn't have one, right? It makes you more desirable as a buyer. One, I mean, your realtors are going to want to work with you. If you go to a realtor and you're like, hey, I want to start seeing homes, and you don't have a pre-approval, they're probably going to say, no, you need to talk to a lender first, and then we can start seeing homes. Because you don't also want to start going out and looking at homes that are way above, what you can actually afford. Because what if you fall in love with a home and you can't get that home? And then also when you do start making offers, when you have your pre-approval, they're going to be confident in taking your offer and accepting that offer on the home when you do have your pre-approval. And like I said, having this pre-approval is going to help you budget, because in your mind, you have an idea as to what your down payment's going to look like on your home. And then also you're going to have an idea as to what your monthly payment is going to look like. Typically, when people see that, it gives them 100% confidence when they start going out and seeing homes, because they're like, hey, I love this home. It's in my price range and I know I can do this. So let's go to the next slide. So just real quick, the mortgage process. So like I said, the first conversation you'll have is with me, a lender, anyone, is taking, just your application. They will pull credit. They'll see everything that you could possibly think of, from your pay stubs, W-2s. You're basically signing away your life over to us, right? So it is scary. I remember when I started my process, I was like, really, should I be giving all this information away? But it's just a way to make sure what you're purchasing is going to be, set in stone for you, and you can do it comfortably. So after you receive your pre-approval, then you go back to Tyler and Max, and they'll start showing you homes. When you find a home that you're like, yes, this is the house, that's when you will make your offer, which they'll go over. So that house shopping is that part. Once you do receive an accepted offer, that's when we'll start the mortgage application process. This is where we'll go over, how much your down payment's going to be. We'll lock your rate. Then you'll go in and get your closing disclosures that will break down everything from your down payment to your monthly payment. After that is the loan processing. So basically, we collect all of the documents that we will need to get you sent over to underwriting. Underwriting sounds scary, but it's not. It's just another set of eyes that goes through your file to make sure you are a qualified buyer for this property. They're not going to put you into a home that you're underqualified for, or is not a livable home. They're not going to do that. So again, having another set of eyes going over your file is critical, because they do catch things. After an underwriter does go through and they approve your mortgage, then you're clear to close. After that, basically, then you show up to title, sign your life away, and you're home.
Awesome.
Yeah. So again, that's just a very, very quick overview of kind of what the process looks like. My huge thing is just education purpose. When you don't know what's going on, that's typically is not a good sign, and that makes you a scared buyer, right? So when you work with a lender, ask them every question. No question is a dumb question. Trust me, I've probably been asked every question you could probably think of, and I've never walked away and been like, oh, that was a really dumb question. No question's dumb. This is the biggest purchase you'll ever make in your life. You should ask every question so it's crystal clear and you have 100% confidence going into this process.
Absolutely. And that's why we've partnered with a lender that is so huge on education and like that personalization, because let's be honest, nobody knows what amortization or PMI, all the stuff means in the front end. You've heard it and you're scared of it. You just need to have that personal conversation and those questions and get educated. And I promise you guys, this stuff is not rocket science. It's just got a bunch of jargon attached to it.
Right. And I think that, sometimes is very terrifying because when I bought my house, my lender did not explain anything. I remember showing up, buying my house, signing the documents and being like, I bought a house, yay. And I felt like I didn't know anything. So again, educating yourself is huge. Even if it's a year from now that you'll be buying a home, start having those conversations so you can plan for your down payment, your monthly payment. And hey, maybe right now you're not making the money that you want to be making, but in a year, you know, you're probably going to get promoted, be in a new salary range. It just helps you to be ready when that time does come. And I think we did have a question, and I'm not for sure how to pop that back up. But to answer your question, if you are in the process of just having questions or, you know, thinking maybe you're ready to start this process, you can always reach out to me. Even, like I said, even if you don't buy a house this year, 2 years from now, I'm here to educate you guys, right? It's free. We don't charge anything for you starting the process. The only time you ever have to pay money is when you actually buy the house, right? So again, if any of you guys have questions, want to start the process to see what like a fee worksheet looks like, I'm here for you guys. Feel free to reach out to me. I'm more than happy to break down anything for you guys and educate you in any way.
Awesome. And we'll have a Q&A at the end. I should have mentioned that at the beginning. For
Oh,
any
sorry.
questions, which can be in the chat, you can feel free to put them in the chat right now or unmute later during the Q&A. But yeah, cool. Anything else on the mortgage while you have the mic, Brooke? Anything else?
No, honestly, again, education is the huge part. And I know Tyler and Max can attest to this. Like when you're a scared buyer, it magnifies everything and it makes you feel like, you know, there's all these moving parts. And if you don't know what's going on, then we're not doing our jobs, right? And I think that's why we're so huge on education. So there's no surprises through the process at all from start to finish.
Yeah, absolutely. I'd rather have a sit down for coffee with someone 2 years out. People think, oh, I'm gonna waste your time. No, I promise you, if you know what to expect and get educated, we'll be so much more organized and efficient when it's time. So the earlier you make the coffee meeting or the consult, the call, whatever it is, that first step, the better. If there's one thing you take away from the whole thing, it's just reach out earlier than later, even if you know your credit isn't where it wants to be or it needs to be, or your income. I promise you, it's better just to have the game plan to make those introductions.
100%. And like you said, even if you don't use us, at least we're educating you to be a smart buyer out in the market and not be, you know, used by a lender or used by a realtor that's putting you in a bad situation.
Absolutely. We'll continue on with the next segment. So where we're going to go here is kind of like the actual process, the nuts and bolts. What to expect if you say, you know, sign me up. I'm ready to go buy a home. Tyler, Brooke, you know, Roots. I want to go buy a home. What should I expect? So the first thing I want you to know is what it's going to cost. There are costs outside of the down payment, and I want to be very, very upfront about what those costs are. Here's all the costs. So the first thing you're going to have to pay, the first swipe of the credit card, so to speak, it's not a credit card, of course, but is the earnest money deposit. So we'll talk about this later, but the deposit on a home is called the earnest money. It is 1% of the purchase price. Typically, it is not always, but it is typically around 1%. And then next, swipe with the credit card, so to speak. What else do I need to expect to be paid for? Well, if you want a home inspection, which I would strongly recommend you get a home inspection, unless you are super experienced with homes and your dad built homes for a living or something. Even then, I think get a home inspection. The base price is around $350. We usually recommend on older homes in Marion County, especially the sewer inspection and the radon inspection if it has a basement. Radon is a tasteless and invisible gas that is a known carcinogen. I know it sounds kind of scary, it is scary. So there's some extras. There's termite inspections too. I usually don't recommend that unless you find it on the main report. So let's call it $700 to be safe for an inspection. Appraisal. An appraisal costs $600 to $700. That is part of the loan process, as Brooke was speaking to. This could be paid up front. It could also be paid at closing. Someone can correct me if I'm wrong there, but I believe that is the case. And then, of course, at the closing date, the down payment will be owed. And I'm gonna talk all about down payment and loan products on the next slide. So hang tight there. So all in all, if you're like, oh my gosh, Tyler, this seems like a lot of expenses. What the back of the napkin is. Some people will say 2% of the purchase price. I say 1.5 because Indiana has some of the lowest closing costs of any state in the nation. 1.5% of the purchase price is closing costs on top of the down payment. So that means if I'm buying a $300,000 house, right, 1.5, 0.0015 times 300,000, whatever that is, plus the down payment is probably how much money you need in your bank account. Plus some savings, because you probably don't want to go to zero when you buy the home. And then, of course, if you're paying for movers or furniture, factoring that in. Okay. So all in all, to recap, about 1.5 to 2% of the purchase price is closing costs on top of the down payment. It's very important you realize there are costs on top of the down payment. Now, this is one of the most important parts of the presentation. The webinar is how much do you put down? Here we go. These are the three main loans. There are probably 100 plus loans out there. There's so many loans. These are the three main ones that I'm going to talk about. The first one I'm going to talk about really quickly is the FHA loan, the Federal Housing Administration loan. So federal, that means it is actually insured by the U.S. government. It starts at 3.5% down. This is a great loan. I do 10 plus loans for clients a year with this product. It's great. It's tried and true. The main downfall is because the government is insuring it and allowing you to buy a home for only 3.5% down. There's some extra mortgage insurance called MIP, mortgage insurance premium. So it's there's think of it like some extra fees on top. Nothing crazy, but it is something to be aware of. A lender can tell you what those fees kind of look like. Now we have the gold standard loan. I would say 65 to 70% of the clients I work with, who aren't all rich people, by the way, very normal people, middle class, a lot of them do a conventional loan. So it is possible to do a 3% for first time buyers. There's some loans out there, but most conventional loans, the standard conventional loan starts at 5% down. I would say most people I work with are putting about 5 to 10% down. Most people I work with are putting 5 to 10% down. 5 to 10, there's not much difference in the terms, by the way. It's just they want to maybe put a little more down to feel safe, have a little more equity in the home just to start. Now you may have heard from your great your grandpa or your parents, you need to put 20% down. It's not true. You don't have to put 20% down. The reason why everyone tells you 20% down is because that is when private mortgage insurance is kicked off. PMI. I have a whole slide here about PMI that I'm going to talk about in a second. But if you put 20% down, or you have 20% equity in the home, meaning if you sit on it and it appreciates, or you pay the loan down and you now own 20% of the home, you have no private mortgage insurance. Private mortgage insurance is like the mortgage company hedging their bets. If you're putting less down, they're adding some extra insurance to make sure they don't make a bad bet on loaning you all this money. But if you put 20% down, there's no private mortgage insurance, which is not a crazy amount. I've seen private mortgage insurance be as low as $25 a month or less. So there are some Community Reinvestment Act loans out there. Some of these I've seen as low as 1% down. Very good loans. they had a lower interest rate than the market interest rate. I was seeing some 6% recently from some CRA loans. These do have restrictions. There's usually strings attached, let's just say. So that might be like you have to make under $75,000 a year. You have to buy a house in this type of census tract area. That just depends. So these are the three I'd tell people to pay attention to. I would say 80% or more of people buying homes use one of these three. Actually, one of these two. The last one is not as common. You may hear mortgage companies, you may hear, Brooke say LTV, 95% LTV, 80% LTV. What does that mean? LTV, it's loan to value. So 95% LTV means you're putting 5% down. 90% LTV means you're putting 10% down. Just getting you acquainted with some of the language here, so you're familiar. I mentioned that if you put less than 20% down, you have to pay private mortgage insurance until you have 20% equity in the home, so it can kick off, so to speak. Well, let's look at an example. So someone putting 5% down on a home would be paying this much at a 4% interest rate. Interest rates are not 4% anymore. They're much more like 7.5-ish right now. But nonetheless, it's good to see the differential here. 1,022, someone putting $40,000 down, which is 20%, would have no PMI. And you can see the difference here. It's $104 a month, and this one's $0. So it does change the payment. They're also putting more down, which means they're just getting a lower loan. So of course their payment's going to be a little lower, but they're also reaping the benefit of no PMI. PMI, how it's calculated, is actually dependent on your credit score. It is incredibly important for a mortgage to have a good credit score. I mean, there's no way around it. It is very important. Now, if you have a low score, you can get a credit score as low as in the 500s to 600s. You can. It's going to probably be an FHA loan with a little bit higher cost to the loan. But ideally, you want to get to 740 plus. I mean, to get the best of the best terms. Now, don't hear me say you have to have 740 plus. You don't. But it's just the best of the best terms and the lowest PMI costs. So to recap, PMI means private mortgage insurance is a monthly insurance on the loan until you are under 80% loan to value, until you have 20% equity in the home. Either you put 20% down or you paid it to that point. And the payment itself depends on the amount you're putting down in your credit score. Okay, let's move on. If you have questions, just put them in the chat. We'll address them later. All right, enough about loans and the numbers. I'm kind of allergic to that myself. I'm not even going to lie. It's not my favorite topic. I'm more about the real estate side. Now we're going to get to that. So the home showing process, let's just say you are step one, you have pre-approved yourself. You've gotten a pre-approval. It's an actual PDF. So it is literally a document. It's very important you get pre-approved and talk to a mortgage lender. That basically sets your budget. It says what you're pre-approved up to. And once you have that, I tell people, I joke, it's like a golden ticket. It's your golden ticket to go see homes. Now, sometimes realtors can show you homes before you have your pre-approval. It can happen. It's not like you have to, but most realtors want to see a pre-approval. I would personally. So then step two is you'll set up a property search. We use Zenlist, which is like Zillow. You can create custom boundaries, price points, bedrooms, bathrooms, garage, no garage, etc. So we'll talk about your needs and wants, essentially. We'll set up a search. Both you and I, as the realtor, or whatever realtor you're using, you certainly don't have to use me, we'll see kind of the homes you're looking at, and you'll discuss with your realtor, when you can see homes. And usually I tell people, just text me. Just text me the address, what you're thinking. If you're on the fence, like maybe I should see it, maybe I should not, just text me. I'm not so much an email hound, but mostly just texting. Things to keep in mind with the home showing process. This is so critical. I really need to underscore this. Do not rush the process. It is ideal to see a lot of homes to gather feedback. I have people who are just off the block, first-time home buyers, who see the second home or something, and they're like, you know, we want to write an offer, and that's fine. I have wrote an offer on the first home someone saw, and they now live in it, and they seem really happy with it. I personally don't think I would do that. I would want to see, you know, 5 to 6 plus homes. So it's ideal to see a lot of homes. Have, and this is just so critical. You don't want to work with a realtor you don't relate to. It is not a good idea. You need to think of them like your second set of eyes and ears and your home search therapist. Take time to form the relationship. Go out to coffee, grab a beer, get lunch, go to breakfast. I don't care what it is. If you don't have a good relationship with your realtor and it's your biggest purchase and where you're going to spend every day of your life, it's just not a good idea. Think about it. They kind of are like your home search therapist. I go really deep with my clients and know way too much about their life by the end of it, but it's fun. It's all fun. All right. Now we're going to get into some of the nitty gritty on what to pay attention to, and I'm going to maybe scare some of you. CapEx, capital expenditures, is an investor term, which is the largest expenses when owning a home. So kind of like the danger zone. What everyone is scared about is these big ticket items that are a reality. When I bought my last home, you guys, the third month I was living in it, I spent $10,000 on cutting trees, cutting a tree down. $10,000 on cutting a tree down because it was hanging over my home and it was dead. I didn't know it was dead. Huge mistake. I use myself as a realtor. I wish I had a realtor to tell me that, but unfortunately I was myself. That's crazy. So having a good realtor will save you thousands of dollars. I probably should have negotiated on that or not bought the home. But here's the cost of some of these items in general. A roof, $10,000. HVAC, furnace, a furnace and AC unit. That's what HVAC means, by the way. Each of those units are about 5,000, probably 4,500 to 5,000. Water heater about 1,000 to 1,500. Flooring 3,000. Some of these other things, you can read the list. Here's their expected lifespan. The most important thing to keep in mind is basically talk to your realtor. You know, talk to your realtor about, hey, are there any old systems? How old is the roof? How old is the furnace? How old is the AC unit? If you can look at these things during the showing, it would be a great idea, and ask your realtor. If your realtor doesn't know, fire them. I mean, I'm being serious. If your realtor doesn't know how to look at a furnace and ascertain, you know, if it's old or not, that's probably a bad idea. They might not have been in many homes. Just being brutally honest here. So this is the average lifespan. A roof is about 25 years, HVAC about 20 years, water heater, this says 5 years. I would say it's more like 10 years, if I'm being honest, and some of these other things. So the replacement cost is on you as the homeowner, and it's very important that you're aware of what is aging, what is getting old. I've never replaced a roof in the 3 homes I've owned. Actually, in the 7 homes I've owned, because I have investment properties, I've never replaced a roof yet because they're every 25 years. But I am expecting and saving for when that does happen because I know I will have to. Okay, so if you want to screenshot that, or I'm sure you can look it up on Google because that's where I got it. Okay, backing up a little bit, wants versus needs. Every so often I talk to someone that thinks they're going to get their dream home on their first home. That is not possible in 2024, unless your dream home is a 2-bed, 1-bath and pretty cheap. Maybe that's possible. Now it's possible, of course, if you're making a lot of money, to get a great home. But these 2 scenarios, some people tell me, Tyler, I want a home office, I want a fenced in backyard, I want an upstairs with a master bedroom and, you know, a 2 sink vanity, a walking. I'm sorry, guys. Maybe your second or third home, you can get the dream home, but your first home probably will look more like this. And it's a lovely home, and it's probably, you know, a 2 or 3 bedroom with one bath home. And so pretty much I want to read the bottom part here. In 2024, you will very likely have to compromise to start building equity. I mean, I'm just being brutally honest. It is a more expensive market than it was 4 years ago. Even the times have changed, and home prices will not be going down. There's not enough home. They're not building homes fast enough for the demand in Indianapolis. I promise you. I look at these numbers every day. There's so much demand for homes. There's not enough. They will not be going down in the next 5 years. Needs are things like location, price range, functionality. These are needs. Wants are, you know, the finish level, the amenities, you know, a huge yard, a home office, basement. Those are wants. They may be a need for you, right? If you have a special situation, that's fine. But be careful what you're wishing for in the first home. It is probably more likely a stepping stone to build equity. Speaking as someone who is on their third home, I stepped up each one. That's the point, is to build equity to get eventually, hopefully, to the dream home. Okay, we're sitting at 6:44. We're doing pretty good on time. Let's continue on. If you have questions, put them in the chat. We will have a good Q&A at the end. I want to press on. High level roadmap. So I'm not going to spend too much time on this. Here's the roadmap from an agent side, from a real estate side, not really the mortgage side. But number one is find an agent, then get pre-approved. Usually your agent will give you referrals for a mortgage lender. Begin your search. Once you write an offer, which I'll talk about offers, then the lender will have a home appraisal. This is how much is the home worth. The lender does this. You don't need to do anything. The lender will do it. You'll get a report. It'll say it's at value or the value wasn't there. And then at that point there'd be some negotiations, AKA just work with your realtor. Don't want to scare you too much on that. Due diligence. So this would be inspections. Some people want surveys. Oh, I actually went in the wrong direction. Offer. I was wondering where offer was. Offer was number 4. And then of course closing day and celebrate. So this is the high level roadmap. I'm gonna get down into kind of 4, 5, and 6 right now. I did have a question. I'll monitor it. Let me see if I had a question that would be worth. I don't even know what the questions are. Here we go. Okay. I see you guys' questions. I'm gonna hit them at the end. I promise I'll hit them. I'm gonna continue on. Okay. Because some of them went back to a previous subject and that could get us a little bit lost. So I'll hit them at the end. What to look for in a home showing. So in my experience, when I was a client, I used to be a client of a different realtor. Now I am a realtor. Sometimes you're kind of tense in showings, you know, oh my gosh, we're looking at a home. It's so expensive. Who's this realtor? You know, are they going to try to sell me on the first home I walk there? It's kind of like tense at times. This is what I want you to keep in mind. There's a lot of information here, but I think it's important information. When you're at a home showing, there's really 4 questions. How does this home serve my immediate and long-term needs? Think about, are you going to have kids? Are you going to have pets? Do you need a home office? Is this enough space for the next few years? Basically, will you be able to stay for a long time, or are you going to outgrow it? That is pretty important. And it's okay if you outgrow a home, you can get a new one, but just keep in mind that that's a lot of work to get a new home. What maintenance, capital expenditures, big ticket items can I expect while owning the home? So if the roof is 14 years old and I think I'm going to live there for 10 years, I'm going to replace the roof while I live there. That's $10,000. I need to be thinking ahead about these things. If the water heater, the inspector said it's on its last leg and I'm going to live there for 2 years, you're still probably going to have to replace it within 2 years. Again, you need to use a realtor that has experience that can help, you know, talk through these things with you. How much will it cost to make it comfortably livable? If you're seeing like, I'd paint this, I need to update the flooring, maybe the countertops, that's fine. If you don't want to do anything to a home, you can look at homes that are matching your exact needs. But if you're planning to make changes, make sure you're understanding the costs associated. I love this last one because of my own story. My home appreciated, I guess like 82,000 when I lived in it, my first home. Will this home appreciate a lot due to the market demand in the area, or can it be forced appreciated through updates? Here's what I mean. If you buy a home for 215,000, and let's say you can sell it later for 285,000, but you only put 25,000 into it, that means you're going to profit after selling costs 22,000 about. So just keeping that in mind, kind of thinking a little bit like an investor, because you are owning a home. It is an asset. It will hopefully appreciate in value. Kind of putting that investor hat on. Do I think this home is going to appreciate? Is it in a growing area? And can I do some low-hanging fruit to force appreciate it? AKA, this is why a realtor can be very helpful. It's very unlikely you're going to know all these answers to these questions the first home you see. You're probably gonna be like, what do I even pay attention to the first time I see? This is why, again, I think a realtor is just so important, having a working relationship with one that you trust. Okay, what if I see a home and I fall in love with it and I want to get it? This is the process to hit on it again. You have a showing, you'll write an offer. And an offer is not that much different than, it is a lot different than Facebook Marketplace, I'm going to be honest, but it is somewhat similar. You tell them what you want to pay for it. It's not that complicated. You write an offer at asking, or if it's been sitting on the market for 40 days, 50 days, that's a long time. Maybe you go in under asking, 3,000, 5,000, 10,000, whatever it is. You talk to your realtor, you write an offer, and your realtor will type it up, they'll send it to you to sign. Usually DocuSign. It's not that deep. And then if the seller likes it, they will accept it, they'll sign it, then you will be pending. If they don't like it, they will reject it or they'll counter. And you'll counter back or you'll accept it, so forth. Then you'll be pending. Pending means that you are now in a period of time where no one else can offer on this home, but it's not yet closed. It's pending. You'll see it on Zillow, it says pending. At this point, that is when you put the earnest money, you give them the earnest money that is held in a third party escrow account, either at a real estate brokerage or at the title company. And it's usually 1% of the purchase price. So on a $250,000 home, that's $2,500. That is within about 2 days of getting an accepted offer. Then you do due diligence. By that, I mean, you work with your lender, you give them the correct documentation, they prepare the loan, they order an appraisal of value, and you carry out a home inspection, and then we close. I'm going to talk about the home inspection and the closing, and then we'll have a time for Q&A. Okay, putting offers in first. I'm not going to talk too much about this. An offer is something that a realtor will type up to you and you'll sign. The factors that you need to consider are the price you're offering, the terms, which if it is competitive, you may have to say, hey, we're not going to request anything under a specific amount on the inspection report, or hey, we're gonna make sure if this appraises low, we're gonna bring some money to the table. It's called an appraisal gap. There are so many terms that I'm not even gonna get into it, guys, because I'm just gonna confuse you more. So just know there's terms that could be involved. I don't want to scare you too much. You're again, pick a good realtor that can talk to you about terms that you need to have. Your closing date will actually be on the offer, so there'll be a pre-planned closing date. It is able to be changed, but it is on the offer. And then the type of loan you pick will go on there. So the seller will see what type of loan you're picking, what your closing date, what your price. Contingencies, a contingency is something that must be satisfied to continue on. So if it is not met, there is an out. You're allowed to get out. There are contingencies in an offer, in a purchase agreement. An offer includes a purchase agreement, basically. So an inspection contingency is very common, and a financing contingency. If you get into the process and you find I can't get the mortgage I thought I would get, you can back out and you will not lose your earnest deposit. You will get it back. A contingency is a way to protect you. If the inspection comes back and you make a request for a new furnace because it's old and broken down and they do not grant you the money or the repair of that, you can back out with your earnest money. So a contingency is a protection, essentially. Again, I'm saying so much information. I'm scared it's even too much information, but this is where a high value realtor comes in to advise you. But I just want you to know this is what's included in our offer. We're getting very close to the end. I want to talk about home inspections. This is something that buyers seem very nervous about. They don't know anything about homes, a lot of them. They've never been involved with homes. They're very scared and intimidated of what's going on at the home. I recommend you go to the inspection. I recommend that you have a lot of discussions about the inspection. But what does it actually cost? I mentioned this, but I'm going to mention it again. The main home inspection is around $350. A sewer inspection, if your home is built before 1970, it's a good idea to get a sewer inspection. $250 about. A radon inspection, which is a gas that seeps from the ground into the basement, sometimes into the main level too, is about $100. It might be $150, but anyway, $700 is about the total cost for inspections. This is an investment. It could save you thousands of dollars if the seller concedes and grants you what you request. And it will save you a lot of money in future repairs that you might not be aware of. It is of utmost importance you get a home inspection and make requests if you see items that are defects. Okay, so how this actually looks, so you're a little bit prepared, is a defect is an item on the home inspection report that will affect safety, number one, safety, number two, value, or livability, any one of the three. So a scratch in the drywall is not really affecting safety, value, or livability. If there are enough scratches, maybe it affects the value. But a water seeping in from the basement, of course, affects the safety and the value and the livability of the home. That is a defect. So it must be a defect. And then you will send the seller an inspection response. Your realtor will type it up for you. You will send it to them. It is an official thing that you send over. Then the seller has a chance to respond. If you send over a response that asks for a furnace, let's just say the furnace failed the inspection. I'm just going to use a furnace, heats the home, right? And the seller says, no way, Jose, I don't want to give you a furnace. I'm not doing it. You can back out with your earnest money, but you can keep negotiating, right? Maybe you say, well, I'll buy the home for half the cost of a furnace. Okay, the seller accepts that, you move on. So there is negotiating, right? And you don't have to be a negotiating professional, but certainly your realtor should have some experience there. So get comfortable with your realtor, have these conversations, go to the home inspection. That's what I recommend. This is the last thing, the process that we're going to talk about, and we're going to open it up for questions and answers. All right, you made it. Now what happens on the closing day? On the closing day, you're going to receive your final numbers from your realtor, what you owe, basically. You're going to wire that. It's a bank wire. You go to your bank or you call your bank, whatever and then you're going to wire the money to the title company. You're going to show up to the title company. It's at a title company. There's a lot of them around town, and you're going to sign the papers, and they're going to get the keys. That's how closing works. Okay, guys. Perfect timing here. We're almost at 7 p.m. Thank you for sticking with me. What is the next step if you're like, I'm ready to go now, or 3 years in the future, I'm ready to buy a home. I just want to take the next step. There's a next step for you, which is first, I'm going to put this, maybe Max can put it in the chat. Max, put it in the chat, the home buying 101 challenge. This is basically a questionnaire that we designed it'll give you a percentage that you're ready to buy a home. It could say 100% you need to go buy a home tomorrow. Could say 20% you need to do these steps and then you'll be ready. So it's like a quiz to determine how ready you are to buy a home. There'll be a link in the chat. I will also send a recap email with the Roots Realty Home Buying 101 challenge. In it, it'll take you 30 seconds to 2 minutes to fill out this, not 30 seconds, what am I talking about? It'll take you under 5 minutes to complete the Roots Realty Home Buying Challenge. It's probably worth doing to see where you stack up here. Secondly, I just put my QR code for my contact information. It has a website, it has the phone number and my email. I would say if you're very interested in starting a home, I want to personally give you the next steps that you need and hear your situation and put you with the right people to make that happen. So save my contact with the QR code. That'll be on the screen for a little while. Lastly, Brooke Peters, you need a pre-approval. Last time I checked, you probably don't have $400,000 sitting in your bank account to go buy a home, so you probably need to get a mortgage. Brooke Peters is with Union Home Mortgage. She's done a lot of deals with our team. She's awesome, and she can put her information in the chat if that works. And Q&A. I'm gonna look at the chat and see what kind of Q&A we have got here.
Yeah, I can help out to
Oh yeah, you want to do that?
To answer
Great.
some of these questions, because I'm sure that your brain is mush after speaking.
Please do. Yeah, you need to talk.
We're all tired of hearing your voice.
Yeah, I'm tired of hearing my voice.
See, top one is how do you recommend we get educated? I think just attending these and reaching out to professionals that are in the real estate space, or reaching out to somebody who already owns a home, just asking questions. You're already here. You're getting educated. You're on the right track. Got the contact information covered. Biggest complication, I think this was referred and put in the chat during the lending process. There's a lot of complications that can come up during the lending process. Brooke, maybe this one's more geared towards you.
Yeah, I mean, I wouldn't necessarily say there's many complications coming up during the pre-approval process. Typically, sometimes people have really high expectations as to what they think that they can afford. And then sometimes it's reversed where people are like, hey, I think I can only buy, a $200,000 home, and they're approved for a $400,000 home. So again, having those conversations with someone that is educating you and putting you in the best position possible is going to be the best bet in educating, like you said, Max. I mean, when you're confused, it means that whoever you're working realtor and lending side is not doing their job. And typically, no, you're
good.
Typically on my first phone calls, what I'll do is basically just get lay of land, setting up a game plan of you kind of getting a rough understanding as to what you're looking for. Then we'll go through and actually do the application process. After that, then is when we go over the education purpose. And you'll see, like I said, a fee worksheet where it breaks down payment, closing cost, and total monthly payment.
Sweet. Next one is how many homes do people often see before they either make an offer or find the right one? It's really dependent on what your needs are and what the marketplace is. In the winter, oftentimes inventory drops. So, we maybe have to see some more homes to get to the right one. And those showings are spaced out more. During the spring, inventory picks up, it's warm out. Everybody loves going and seeing homes. I I love when clients kind of take advantage of the open houses that are available on the weekends and going and just getting an idea of what's in a marketplace using, I mean, it's not the newspaper anymore, right? It's 2024. You have Zillow, you have Zenlist. We have these resources online that make it so easy to view what the homes are that you can, disqualify. And really the ones that you're sending saying, I want to move forward with this. It's my perfect location, has the bed, the square footage, the garage, whatever it is that you specifically really want on your priority list. Maybe it's just price in general. And just sending that and being selective through it. So I'm sure back in the day it was a lot harder and you probably saw a lot more homes, and I mean, to put a number on it, it's like, I would say an average of 5 to 6 is what I've seen personally with my, like Tyler said, sometimes it's the first one and sometimes it's like the 25th one. It really just depends.
Yeah,
So,
and going off that, in my personal experience, Zillow can also be very misleading with the pictures.
that
In
is
my
true.
in my process, I remember I would get on Zillow and I would be like, found the one, this is the house that I'm going to be living in. And the pictures were amazing. And I got there and I was like, okay, whoever took these pictures really did really, really good job. So I think, in going back to what Max and Tyler said, it's very important to get your feet wet and start seeing homes, because that's going to help you on your wants and your needs list, right? Then you're like, okay, I definitely need a fenced in yard, right? And then you start looking at homes that do have that.
Yeah, definitely can be misleading. I have a very specific photographer that I use, and he does not use Photoshop on the homes. In fact, I asked him to use Photoshop because there's like weeds all in front of a fence, and he just went before the guy could go and clean up the weeds. He wouldn't do it. So um, it's on Zillow with weeds in front of the fence. Maybe that's why it's not selling. To the realtors, I think this was Tyler. You had mentioned that you used yourself as a realtor and made a mistake super early on in your career that you learned from, and obviously had to pay the cost for. Kind of asked if we use different realtors. I think it says, when you buy homes, do you use realtors, or do you try to find somebody new? I just use myself, obviously, to save on the costs, like an employee discount. But when searching, I recommend not using maybe who your parents are recommending, or who they used, right? Like when I bought my first house, I was not licensed, and my parents referred me to our neighbor who was a realtor. Um, I I did not. She did a fantastic job, but I could not relate to her, right? What she thought was great for me is not what I wanted, right? She's showing me grandma's house. I'm like, I want something cosmetically a little bit nicer. If it's going to be grandma's house, it's got to be in this location at this price so that I can update it and do some DIY work. We just couldn't see eye to eye on it. And that didn't work for me. In fact, I ended up finding an off market deal, and unfortunately, she didn't get, I think my mom ended up compensating her. I don't know. So be selective. Like Tyler said, know, like, and trust your realtor. Be able to go grab a beer and hold a conversation with them. If you can't do that at the least, you are buying the largest asset that you will ever own. Make sure you're buying it with somebody that you know, like, and trust. Let's see. Some red flags with realtors. I know Tyler hit on having a realtor that can actually point out some of these higher ticket items while you're on a showing, and point you into actually making a good investment into the asset. I think just doing a quick scroll, Zillow, all realtors have a Zillow profile because Zillow is just massive, and that's a big place where we advertise ourselves. Just look at what their last 12 months of activity have been. If a realtor has only sold one home in the last 12 months, well, maybe isn't the best option for you because they haven't done this enough times, or maybe they've sold 150 homes. And that's why they're not texting you back, because they're just way too busy, right? You got to find kind of a happy medium. Again, somebody that you can relate to and know, like, and trust. Sure, go use somebody that's only sold 3 homes in the past 12 months. You are going to get a very, very personalized experience with My Expectation, because they have nothing but time to help you out, and they might be fantastic. You just have to be able to vet them. And some red flags for me would be to the point where they can't articulate the investment side of what it's like to own a home, and can't do the education. if you feel like you are just the next transaction, like you're at a gas station buying a Coke and the cashier is just ringing you up, giving you a receipt saying, have a good day, maybe don't use them, right? You need somebody that's going to take time, explain the process, and, kind of hold your hand through it, because it's a huge deal. Not the car dealership, whatever. I could ramble on for days. Do you suggest using community banks over the bigger mortgage banks? I suggest using mortgage brokers, people that are not at Chase Bank, not at BMO Bank. Yes, they're going to have these huge incentives of first-time home buyer credits and all of this stuff, but at the end of the day, Chase Bank does not want to be a lender. That's not what type of business they're in. So that person sitting there helping you out is not they have to stick by exactly the rules that are printed out for them. It's what I found, at least as a realtor, on the side of having to get through appraisals, having to work through creativity to get a deal done that fits your parameters that you can afford. They're not as flexible on that. Mortgage brokers can just go boom, switch to a new lender. Union Home has fantastic products. Haven't ever had an issue closing with them. Usually we're closing early.
Yeah, and going off that also, having a local lender is going to be so much more helpful, because I'll tell you, after hours, the amount of times that stuff has just exploded that you need done right now. A bank is 9 to 5. They also don't work on Sundays either, right?
Correct.
So if you need something right now, I'll be honest, they don't care. They do not care, because they have a lot of other things that they are spending their time on. Like Max said, they don't really care about mortgages, because they've got way higher up stuff that they're dealing with. So again, I've had people that have left banks to come over to get a mortgage with us because they simply were like, they didn't text us or call us back. I had no idea where we were in the loan process. And that's a huge part. You want someone that you can text and call at any time of the day.
Yeah, I think to echo that, every single time that I've been in a transaction with a larger commercialized bank, every single time, 72 hours out from closing, my phone will not stop ringing from that lender, because it is doomsday. Everybody's freaking out. Everybody's panicking. We don't know if it's going to close, because they're not ready. They don't open up the file until like 3 days out. Loans take a long time to process. There are so many steps that have to go through to get to the finish line. And you need somebody that's actually, taking care of that, and at the end of the day wants to and is motivated for your business. What are your opinions on purchasing apartments / condos versus traditional single family? I'm thinking of condos, townhomes, or row homes versus single family. It's really saleability on the back end. A lot of people, I know my wife was like this. We ended up renting for an extra year when we could afford to buy a home, because she was like, I'm just not ready. That seems like a huge, huge investment. Not on the money side, but more on feeling locked down. It's like, I kind of want to live in an apartment. I'm still liking the apartment vibe. So townhomes aren't bad. There's always going to be people that want to buy townhomes, but I would say the buyer pool is a little bit smaller than your traditional single family is really the only implication. Duplexes, everything's saleable. It just takes more time on the back end would be how I would point you there. Depending on seller's inspection, or you always get your own inspection. Don't use any inspection that a seller has. They could have taken things out of that. It is worth the $700, please. I didn't, again, on my first one, I fired my realtor, right? Went off market and did it all on my own. There was about like $15,000 worth of stuff that I missed in the process. I think what Tyler and I both are echoing is we were young and dumb and decided to go and try to do this on our own, because we're both very hard-headed people and think that we know what we're doing. And both of us had huge cost implications from that actually would have just been cheaper to pay a realtor, right? In the hindsight, there's a fee baked into the purchase price. And we would have saved money by just having a realtor, because they would have caught those things. Let's see what else. Biggest defect or contingency you see most often that stops prospective buyers from looking. Biggest defects on houses that I see, especially in Marion County, are foundations, because these homes are old, right? I represent a lot of investors that flip homes, And part of that process is they're cosmetically making the home look much nicer than it was before, right? They're investing hundreds of thousands of dollars to essentially do new construction on old foundations. The good ones pour the money in to rework the foundations. But I think Tyler had the graphic. It said 50 years is about the average, lifespan of a foundation. Not to get like, I don't even know what I'm trying to say, but the home settles over time. And when that happens, there's settlement cracks that allow water intrusion that makes the home, the foundation expand. Things go wrong. They're very expensive to fix and nobody wants to fix them, right? And this is the cool thing that I know Tyler and I both can do. We have walked way too many homes for any one human to have ever walked, and we can walk into any house and we don't even have to go to the basement. We can tell you the foundation shot. It's going to be $30K to fix it. And then we can go down there and show you exactly why. And the reason that we can do that is because we can feel the floor. When I walk houses now, I feel like the floor under my feet and can tell you if it's a good foundation or not. So that's the biggest one. And it's just being proactive. I also have a ton of contractors that can save deals because they are not commercialized. Again, kind of going back to the lending thing. You're not paying for their advertising. They are local, smaller companies that do really great work on foundations and can help out in that area too. So, and then upgrades that have good ROI. Simple, small thing that you could do, change handles on a cabinet. Boom, you just added value to your home. So many little tiny things that you can do to a house to add value.
Yeah, another one is I think they said the cheapest thing that adds value to a home is light fixtures. So
Yep.
you'll see old stainless steel, RIP stainless steel. Nobody likes it anymore. It seems like maybe it'll come back probably in 3 years, whatever. But black, right? Black and gold is all the rage, right? So, it's certainly paint, hardware, like Max said, and fixtures is huge and does wonders to a home.
Yep. LVP flooring is like a big puzzle. Super easy to DIY. It's literally putting a huge puzzle together on the floor. In my first house, I spent $15,000 on floor, paint, framed in a laundry room, and changed hardware on the cabinets. After 2 years, just like Tyler, I actually just sold a couple months ago. In that house, I walked away with $130,000 in my pocket in cash and went and bought 2 investment properties. Like the power of what you guys are on the track to get to is huge. And I know we harped on pre-approvals a lot. The reason we do that is because what I don't want to happen is I don't want to go show you a $300,000 house and you can only afford 200. That sucks because it just demotivates everything, right? It's just like, I don't go shop at Louis Vuitton whenever I can only afford knockoff. Same exact principle. So appreciate all of you coming out. I think that we can wrap if there's no other questions. Chat seems to have quieted down. Tyler, you have any last remarks?
No, I think I would encourage you guys, if you're on the fence, take the next step. Schedule a meeting with someone here at Roots, whether it's me or there's other agents here. I can definitely at least intake your information and set up a call with you or pass you on to the right person. So save my contact if you have not yet, the QR code, and then Brooke Peters. Hopefully Brooke, did you put your information in the chat?
I did. I put my cell phone number in there. That's
Yep.
the best way to contact me. Just shoot me a
Sweet.
text or give me a call and we can set something up. So
Awesome. Thank you guys for investing in yourself and joining in this webinar. I know it's 6 p.m. on a beautiful Thursday night. Let's get out of here and go watch the Pacers game and watch them hopefully dominate. But thanks, guys. And yeah, we hope to talk to you very, very soon. Have a good night.
Peace.
Peace.